Okay, people, this week we have like three major things we're going to be doing, right? The usual is the analysis for the week, the forecast, right? Focus is one thing, it is coming, it is going to be the last thing on the table. Before that, we're going to talk about trades I took alongside the Australian dollar Swiss franc saga. But also before that, meaning the first thing we're going to be talking about today is a test. The other week I had a GPV challenge, right? GPV USD challenge where I just took whatever fair value gap I found on the 4 hours. This time we're trading somebody's trading strategy. A guy who goes by the name DAX, the DAX brand on YouTube. This is his channel right here, the DAX brand channel. And he teaches something called QMR, QMC, basically. QMR and QMC. And this is his mentorship, online, free, available for anybody to use and learn QMR, QMC in the way he understands it, right? Anybody who's teaching you something is teaching you from the way they understand it, right here. So right here in my broker, we're going to start with the DAX branch, the DAX method. So right here on New Zealand, Australian dollar, I noticed something which is completely in line with the DAX tutorial, right? Completely in line. And what is the DAX tutorial? I'll put this up on full screen. So this is it. This is what DAX trades. Let's start with a bearish bearish trend, right? So we're saying lower lows and lower highs. But now, this is where his trend starts from. Now, we now see market do something like this. Take out previous high. Okay, for me to explain this better, let's zoom into the daily, right? So we have this happening, right? Which is what is happening right here. Between here and here, right? This is what's happened between here and here. You see, first high right here. Let me just relate that. First high right here, low right here, high right here, and so on and so forth, right? And so on and so forth. So we have this. Now in his technique, we don't know what's gonna happen, but when we see market do, we have to see the market do it by itself, right? So we see the market do this, right? Meaning this was the last lower high, right? I want to make this green since it was a high. So if price goes above here, it's a buy. If price goes below the low, it's a sell, right? So price did this. So this is a low, this is a high. I think I should extend this, make this more visually appealing by making it more elongated. Yeah, so this is it. All right, so when price goes above this high, right, a lot of people will say we've experienced a change in a change of character, which is a change of character in the market, a change of break of structure. Actually, this is just a break of structure, not a change of character. This is something called break of structure. Let me put that down here. So BOS, break of structure. So most people will say we already have break of structure, BOS, right? Because price is no longer giving higher lows, higher highs, or lower lows and lower highs anymore. It just took out one higher low, one lower high, sorry. Now, for QMC, right, I'm putting it here. There's a QMC. There's also, I didn't write that. There's QMC, there's QMR. Both of them are both Quasimodo techniques, but one is continuation, the other is reversal. So Quasimodo continuation and Quasimodo reversal. Let's just write it like this, so it's just under 3 words. So Quasimodo continuation and reversal, but this is how it happens. There's the reversal before the continuation. Now the reversal is, what you do is, when you see this happens, right? When you see this happen, most traders are, I didn't use the right text prompt. I'm supposed to use the normal text text box to do that. So normal text box, putting that above this point here. Or no, actually no need. I need to just use this instead, right? I could just use this instead. All right. Okay, so if this is rated as a break of structure, so what happens is this, right? What happens is this. Sorry, I'm a perfectionist to one extent. I like to have it perfect. So after this break of structure, what makes a QMR? You know, the QMR comes first before the QMC. What makes a QMR is when you measure from here to here, you're waiting for price to come in within the 50%. No, now for normally it is the 38, it is the 0.382. But DAX specifically prefers that price makes its way to the 50% before reversal, right? So if price makes its way down to the 50%, you can see this is the 50%. It doesn't take out this low. It could go beyond this, but it doesn't take out this low, right? It go all the way down here before it moves upward again, right? If it's moving upward, right? If it moves upward, the target for it is to create another break of structure right here. That is, it is now respecting it. Take note, there are two lows it's respecting. It's not just respecting this major low right here. So this is like the major low. It's not just respecting this major low. So I'll call this M low. So it's not just respecting this major low, right? It's also respecting this low that was made here before, right? So this is Quasimodo reversal. So people usually place their trade when they see this happen after this break of structure. They usually place their trade right here on the fifth, either the 61.8 or 50%, whichever one, and they put their stop loss below this low, and they aim for maybe this high or the next high after that, right? Which is this particular high right here, which is this high right here, right? So they could be aiming for one of this, or based on their calculation, they could have a set risk to reward ratio, which could be 2, 3, 1.5, whatever it could be, name it. This is their own expectation. Now, that is for Quasimodo reversal. Now, we do not know if a break of structure is what called a Quasimodo reversal yet. So most people, they tend to wait for it to happen, right? So this trade is already taken as of this point. So immediately they find this, immediately they see this first move, right? They set up here. Immediately they see this first move. Immediately they find this first move, break of structure, they set up at the 50% already, which is high risk move. Now, in DAX's opinion, he prefers that this already happened. Now, this shows that there is a continuation, right? Continuation is that price does the exact same thing again, but this time it doesn't take out this low. So it moves down and goes up and takes out this high instead. So this is now a continuation. So this is now a QMC. So take note, all of this right here is called the QMR. And then when this is now added to it, it now becomes a QMC. That's the first part of the entire strategy. Now, with this strategy, it means that price does this, and price does this. So for a QMC to be fully confirmed, you would notice that price does this exact same thing. Sorry. It does this exact same thing. Again, it goes down. It doesn't take out this low. And then it goes up again. So this is now, it's a QMC. It's moving in line, right? It's moving in line. It's moving in line. It has reversed. Now it's continuing its reversal. So this is a QMC. Now for DAX, this is what DAX does. Now that says he will take the low candle here, that means the last bearish candle, and he will draw a rectangular box around it, right? This is the last bearish candle with a rectangular box around it. Why am I using purple? Because that is his colors. That is his color. He draws a rectangle around it. Now, he expects that price does whatever it's doing, go whatever distance it wants to go. But when price finds its way back to this level, it is highly expected for price to kick into this level. It can find its way all the way down towards this low. I think I have to do a little bit of yeah, so good. This is perfect. I need to hide all of this so we can see what we're saying. Yeah. So he expected that price is going to come into this low, probably make its way up down here, you know, into this low. It might not touch it, but it might make its way here. But upon meeting here, he has already placed a trade, and his trade would be on this line. He's going to stay right here. Stop loss below this, so it could be here, but he likes to give it breathing space, so he likes to put it somewhere around here. And then he aims for a 3 risk to reward ratio, which is this. Which is this. So he aims for 3 risk to reward ratio. And then he expects price to do whatever it does, but not go beyond this position before it starts to make its way up for his take. That is his expectation. So all of this, putting all this knowledge right now into the chart, right? Putting all of this knowledge into the chart, I use the zigzag indicator, and I just saw this the other day. Now this is the indicator, zigzag indicator, and it's clearly showing. In fact, I do not know why I deleted all of that. Let me just put it all back. Yeah, let me just put it all back. So if I remove all of this, clearly, the zigzag indicator is literally showing the exact pattern right here. You see the up, down, up, take out high, which is this high. So first BOS break of structure. Come down, doesn't take out the low, doesn't take out this low either. And you can see second low taken, second high taken. So now it means whatever I'm doing, I should start aiming for a 3RR, right? 3RR. Remember, your risk is what makes your reward, the 3RR. Don't forget that. That is very important. Your risk is what makes your reward a 3RR. So it means whatever you're risking, it should be reasonably, your stop loss should be in a reasonable direction. So because I'm trading the QMR in this, I'm going to put up the chart now. So it means, according to what DAX teaches, this is supposed to be a trade that we're supposed to take instantly, like instantly. I am going to take this trade. This night, market is going to open around 10, 11, and I'm just going to jump in and place a buy trade instantly on New Zealand dollar against the US dollar. And I'm going to be aiming for a 3RR. So how did I calculate my stop loss, right? How did I calculate my stop loss? This is how I did it. So I measured from here, from the high of this place, that's from the high of this, what is it called? From the high of this POI to the lowest point, you see is 1.38%. If I pull up my calculator, so 1.38, and I want to take about 30% of it. So multiply by 3, so that's 0.41, right? 0.41. And if you measure from the low, right, to where my stop loss is, it's about 0.46. So this is how I measured my own stop loss for this trade. So I'm giving it an extra 40%, 40% buffer from the low of the entire region, right? Now I'm going to place a buy trade. I'm supposed to, I would have placed this trade. I saw this trade yesterday, which is Saturday, and the market is already closed. So I would have placed this trade if I had seen it on Friday, and my aim would be simple, right? aiming for the usual 3RR. I literally named it DAX PY. I might not go all the way to 3, but all I just want is for price to make its way to at least 1.5 or 2, and then I'll be out of the trade. If it can make that, I'll take some percentage and let the rest roll. So this, my friend, is my plan for next week. Move number 1. Now let's move on to move number 2, which is the Australian dollar, the Australian dollar Swiss franc madness. Why do I say the Australian dollar Swiss franc madness? On my strength meter, now normally you all know I use market milk.baby pips, but I'm changing this because over here I have to come look at weekly, though I love it because it shows me like historical timeline. I do love it. I still use it. I have to always switch down to daily and switch down to real time, and in this case being weekend, I have to use last close. You see daily, you see Friday was the last day, was extremely crazy for things like the New Zealand dollar, the Japanese yen, you see the euro, the Swiss franc, the Australian dollar, and the US dollar. You see 1, 2, 3, 4, 5, 6 experienced crazy move. You can see that sudden spike in movements. You can see sudden spikes in movements, sudden changes, especially for the US dollar. There was a sharp change in trend. The Japanese yen sharply continued its trend. The New Zealand dollar also a strong continuation of its trend. The euro, slight change. The Swiss franc, sharp continuation, and the Australian dollar, major sharp continuation. And you can see right here on this chart, the most craziest move was made by the Australian dollar and the Swiss franc. Right here you can see it's the US dollar seems to carry it, but Australian dollar, Swiss franc, and the US dollar. I do not need to be doing this all the time. This is why I switched into something called fxblue.com, market-data/currency-strength. What I do here is, the reason why I like this place is it gives me a clean, instant indication of strength by taking weekly, the daily, the 4 hours trend and dividing and giving me the average of that currency. So you can see these 3 put together, the average of it is 5, and that is extremely bullish. And right here you can tell right off the bat that the Swiss franc was the strongest move in terms of the long term. It's combining 3 time frames. Remember, this is showing you 1 time frame alone individually. This is combining 3 time frames already and giving you an average. So you can do short term. Short term is for people who scalp. You can see the 5 minutes, 15 minutes, and the 1 hour. For the medium term, people who are like intraday, who trade for like a day or two, can trade for a whole day or 2 days. You can see this is the 30 minutes, the 4 hours, and the daily. And then for people like us who are swing traders who like to hold trade all the way to like days, weeks, you can see this gives me the 4 hours and the daily and the weekly, which we all know these are the 3 time frames which I usually bank on what is really happening. Then I use the monthly to determine, okay, what's the real overall direction. Now, this, my dear friends, is me having the easiest means to see what I want to see without looking at the chart. And right here you can see the Swiss franc was heavily bullish, the Australian dollar was heavily bearish, meaning they are like on the 2 opposite spectrum. Now let's see this on the chart. We're going to pull up Canadian dollar as Swiss franc. The Australian dollar and the Swiss franc. Sorry, that is supposed to be AUD Swiss franc. Ooh, I did not, I just closed that mistakenly. All right, let's see if we'll find it on here. AUD. Can I open it? Oh, I already have enough tabs, so let's just close one and add it up. Okay, so you can see right here, this was a show of, should I call it bastardization or total removal? I mean, look at, this was Wednesday, Thursday, Friday. You can see what happened on Friday, and To prove that this is a daily problem, right? Over here, you look at the daily move on this point and the daily move on this point, you can see bad as, good as. Clearly, even the New Zealand dollar is seriously beaten. Like, it took serious battering. Right there. I mean, look at both of them. Heavily destroyed, my dear friends. Heavily destroyed. It was like, I don't even know how to explain it. But if we take a look at the news, right? The news for Australian dollar, Swiss franc, and New Zealand dollar, what we would notice is the Australian dollar had like infos prior to this, right? The Australian dollar had some low news. See, this is what retail sales was bad news. The PMI for Swiss franc was bad news. So how come the Swiss franc gained so much ability? So this is where it happens, right? On Thursday, this happened. The New Zealand dollar is still on the average level, but the Australian dollar released a very terrible trade balance, like extremely terrible. It is bad, real bad. And then the Swiss franc released a just slightly bad CPI news, meaning at this point in time, it is more trustworthy to be buying Swiss franc than to be investing in Australian dollar or the New Zealand dollar. Even though the Australian dollar brought out an unemployment rate which was slightly higher than its forecast, but it still made more sense to stay here than the Australian dollar or the New Zealand after their news. I had a trade Canadian dollar Swiss franc, right? I had a trade Canadian dollar Swiss franc, and this is one of the most painful trades I have made in a long time. I placed this trade. You can see twice I tried to sell this trade. The first time I left the market with just 11 cents. I closed the trade with just 11 cents. The second time I closed it in losses of $45. And this is the trade right here. So I entered this trade some days prior, and then on second was when I closed this on this trade. On second, let's see, was it on second? Yeah, on second I closed this trade. Second, early morning on second. And why did I even close this trade? I want to show you why. So on second, when I woke up, I saw that this area seems like it is suddenly getting heavily respected, which truly, let me say, it's not supposed to be in my context of view, but was really getting respected. And then guess what? I then saw this happen. Like, this was a clear show of strength that the Canadian dollar was stronger than the Swiss franc, right? Was way more stronger. And what do you do in this case? You cut your losses, right? You cut your losses, and I decided, okay, I woke up the next morning, I saw all of this, and I was like, I don't think it's gonna be a good move for me to stay in this trade. And then I walked out of it, right? I walked out of it right around here. I need a vertical line. I walked out right around here. So this is where I walked out of the trade, and I didn't come back to look at it anymore. I wasn't chanced throughout on Friday to check the chart. If not, I would have jumped in again right around here after seeing such bearish move. I'd have jumped in, but it turns out that this trade would have yielded the expectation, which was a 1.19 risk to reward ratio. And guess what? It even went further to give me a usual target of the 2 risk to reward ratio, and even slightly more than that. But all that trade is in the past. That has happened. This just goes to remind us, when you make a trade, when you place a trade and you have a very calculated stop loss and take profit, stick to it. You can see this other trade hit stop loss. I'm not even pained by this one anymore. Like, I was not even pained by it when it hit stop loss. I cannot even remember what it looks like, but I'm not pained by it. But you see, this one, I was really pained by it. Now, all of that by the wayside, let's head into the real reason we're all here, the analysis. So the weekly forecast, weekly analysis, weekly expectation. The weekly expectation will start with the usual, the majors, right? The majors only. Let's start with the Australian dollar, the US dollar. Now, in my opinion, right, I am scared of touching anything that has to do with the Australian dollar and the New Zealand dollar right now. But it doesn't mean we will not do some analysis on it, right? So right off the bat, we can see that on the long-term perspective, right, buying the US dollar as compared to the Canadian, New Zealand, and Australian dollar makes more sense. So let's just quickly dive into that. AUD, Canadian dollar, let's see where's the Canadian dollar. This is it. So AUD, Canadian dollar, and New Zealand dollar. So it makes sense to be buying the US dollar when it comes to these three pairs. So if you're buying the US dollar in this case, it means you should be shorting this market. And right now it makes hot sense to be shorting this market because it just proved to us that I was going to go down. But I don't just short because I want to short. I short because I have a strategy and it's actually appealing to my strategy, even when the market is saying otherwise. Now, right here, you can see as of last week, we said this high is supposed to be protected if the market really wants to go down. The worst it can do is to take out this high and then the new high will become respected. Now, it has fully respected this. The target was this point, which has been made, obviously. And right now, all we need right here is new context. We can now look for new context on the weekly and the daily. On the weekly, we need the entire week to come, do whatever it does. I am suspecting price will not make its way up to this level, which is 0.61868. So I'm expecting that price doesn't make its way all the way up here, but if it does, then we might not be looking at a bearish market anymore. Because if price makes its way back all the way up here, it means that there's way more buying pressure coming in as of recent, right? But if price makes its way anywhere within this range, well, it shows that, okay, there is some buying pressure, but there is not much, so much to nullify the selling pressure that has occurred in this market. So let's hope to see if there is a weekly trend up throughout next week. But on the daily also, in the daily, we have an extra level. So these are the three levels that we expect price not to come up to on the daily. So if price, this is where the fair value gap is going to start from. If price makes its way back here just tomorrow, right? Tomorrow, then we should, my dear friends, you should run away from this market. If price makes its way beyond this point and closes beyond this point, obviously you should run away from this market. Just run away for the week. But if it doesn't, well, then we are likely going to be experiencing a reason to short this market on the daily and target for somewhere like here. Oh, I'm setting this 1, that's a mistake. Somewhere like here and somewhere like here also. So these two targets, in my opinion, are worthwhile to watch out for. That is for the Australian dollar, US dollar. Now let's dive into the Canadian dollar against the US dollar, USD card. So we're supposed to be buying the US dollar, right? Remember, while buying the US dollar against these three currency pairs, right here, you see my previous analysis all sitting down here waiting. So on the monthly, I had this fair value gap. So remember I said we have 2 candle rejection. Second candle just came in, made the move, and is very well rejected. So over in this market, I should be looking for reason to even buy this market right now. So before I buy this market, the only thing I need to see is I need to see a bullish fair value gap, right? I have with me right here a reason to come in. So all of this, my dear friends, no longer matter to me. All these daily reasons to trade the market. So right now, if the market is bullish, right? If the market is bullish, in 2 days time, I should be seeing the market make moves whereby there will be a space around here somewhere. There will be a bullish fair value gap space around here within the week, within this week, right? Within this week, If that happens, then I should be aiming to go for a 2RR, whatever it happens. Stop loss below this point. Targets 2RR wherever I see it happen. Wherever I see it happen, it could be here, it could be here, it could be around here, but wherever it happens, then that would be what I'll be taking. So this market should be on my watch lists. That is what it means. US dollar, Canadian dollar. So I should be putting this on my watch list right there. So I've been added to my watch list. Also, now we head into the, I don't need this anymore. Oh, that should also be on my watch list. The US dollar, Australian dollar should be on my watch list also. All right, so let's head into the next one, the New Zealand US dollar. Okay, so remember, this is where I want to test something. When it comes to my own analysis, right, using this trend, using the strength of the market, I shouldn't be buying this thing yet, right? So remember, we're going to be using this for a test. So you can see right here, it's already written here, right here, straight buy 3. I'm going to be testing this. This is for a test, but also following my own personal analysis strategy, my own strategy. Let's put this all up back. I removed this. So I do not have a monthly fair value gap saying otherwise. I already have my 2 candle rejection. So there's tendency that there will be consolidation going on here. Tendency, right? We don't know if the market is about to reverse. There's a tendency that there will be consolidation here now. But on the weekly, I do not have it's just like the US dollar, Australian dollar. I do not have a reason to short this market, clearly. I do not have a strong reason to short it. And on the daily, I still do not have a reason to short it. So what am I looking out for on the weekly? On the weekly, I am looking out for here. Okay, if there's a fair value gap that happens on the week, it is not certain. Why? Because the fair value gap is now below. It's no longer the first line of defense. This is like my first line of defense. This is my first line of defense. So it's no longer the first line of defense on the weekly. So we are not certain anymore in the weekly if it's going to be bearish. But on the daily, this is my daily first line of defense right now. Daily first line of defense, and this would only make sense. The fair value gap will only make sense as a first line of defense if price doesn't come beyond this position. So if price goes beyond this position, it is going to be hard for me to take it as a first line of defense. And you all know I do not like to go beyond the daily when I analyze. So this is like my major point right now. So currently this is my first line of defense. I see price make its way down, create a fair value gap, bearish. Remember, bearish fair value gap is what I am aiming for. Nevertheless, I'll still take this DAX trade to see if it works. It might work. Maybe the New Zealand has a specific thing that will happen this week. So let's see if possibly something is going to happen this week, right? We haven't checked the calendar for this week yet. So the New Zealand dollar, okay, they do have things that will happen this week. They have their cash rate, which is their bank rates, coming up this week. We don't know if they will increase or reduce it. They might increase or reduce it based on what is happening. So over here, they are saying there will be reduction. We don't know. Do they have any other thing? Business manufacturing index, the business confidence. That's all from the New Zealand dollar. And the rate statement is going to come out alongside the official rates release. So we might see something useful here. This is already in my book as the first thing I should watch out for when the market opens, to just first and foremost take the test trade and then also watch out for my real trade. Now for the euro US dollar. Now we've tested all the things we should be selling as compared to the US dollar. Now when it comes to these cases, the euro, the Japanese yen, the British pounds, the Swiss franc, you should be buying it against the US dollar, but you should be cautious when it comes to the euro, the Japanese yen, and especially the pounds against the US dollar. You can see that they are not so far away. So you should be especially careful with this one. This you can actually release a little bit of care, and this you can also release a little bit of care. So let's focus on the British pound and Japanese yen. Now, British pound against the US dollar and the Japanese yen against the US dollar is the next target. The British pound against the US dollar, we see this month, the month of April just started, and we are already printing so we're expecting a monthly fair value gap right here, and currently we're already printing a very strong rejection, which is not a good sign. It means that this high, there's enough reason this price is so painful to them that they do not want to take it. So this is scary, right? This is scary. On the weekly, so this is, remember, the month has not occurred, so this is not like useful yet. So on the weekly, being that price has finally mitigated with the weekly FEG, and you can see what I did right here. I had an analysis where I said I expect price to come into this place. You can see it right here, come in here, make a reversal and move if it's going to be bullish, right? We'll see that reversal. And right here, you can see this statement, 4 hours bullish ST. On the weekly, we have price finally, so this is the second line of defense, right? This is the SLD. So second line of defense, my slot. That sounds awkward, but that is it. And I see price finally coming to it, but the price really goes useful into it. So price hasn't really made any useful entrance yet. According to my analysis. I would love to see a more useful entrance, but if I see, I don't trust this. I don't think I'll take any trade here this week. I'm not seeing a reason to even look at this chart anymore because I'm not seeing a reason to trade. But on the daily, let's see if there's an opportunity on the daily. So on the daily, there was an opportunity. People who wanted to buy would have be looking for an ST here. But I mean, look at the 1 hour. We didn't get an XT, right? You see, we didn't get a bearish fair value gap and a bullish fair value gap afterward. We didn't. If we did, then we would have expected price to make it at least here and possibly here or here. But none of that happened, and instead we're seeing price make its way to the low, covering the fair value area from the 1 hour. I know my terms are confusing, but if you know what I trade, the MMC technique, it works for me and I like it like that. So I'm waiting for a clear reason to even enter this market at all. So British pounds, US dollar, in my opinion, not something I should be trading. So I do not need to keep this market on my watch list. Let's head into the US. I think I missed one. Yes, Japanese yen. Okay, yeah, so this is it, Japanese yen. All right, so I had a saying here that says ST in 1 hour time frame or bullish fair value gap in 1 hour time frame. Let's see, did that happen? ST. Oh, I have an ST in a 1 hour time frame. Okay, so on the daily, it means on the daily there was supposed to be something. That's weird. What kind of ST? Oh, bearish. Oh, bearish ST in the 1 hour time frame. And I had that right here. Oh, okay, that was for 2nd of March. So far away. so far away. All right, so this is like old cargo news, not meant to be here anymore. Yeah, remove it. This is not meant to be here anymore. I was thinking that was something useful for us. All right, let's head into it. Monthly, right? On the monthly, do I have a new context? Yeah, this is a new context right here. And with this heavy rejection, I'm already skeptical about this situation, right? I'm very, very skeptical about this situation holding its ground. But also, this happened, got mitigated here. If you see this particular candle was a good mitigation. So I don't need this. So what I really need now is This low has been taken. So we're likely heading for this position. We're likely heading for this position. Seriously heading for this position. Likely. But first and foremost, we have to get here before we get here. And then if you look at it on the monthly, right? That's the monthly. So on the weekly, on the daily, basically, we're waiting to see if price is going to make its way back into this point, give us a sharp turn, and then move out. Not just into this point, right? We're waiting to see if price makes its way in here, but never crosses this place, right? If it doesn't cross that place before it gives us a sharp turn, then we will aim for lows. If it does, so it can cross this place, go within here, wherever it does it, but it doesn't cross here before it gives us this. If it does, then we'll take that trade. So right here, this is something I would like to be looking, but it will take a long time before it happens, because you can see the weekly candle is very hard. Ooh, I'm seeing a strong reason to buy this gain. Why? Because you can see this is what they call liquidity rate. So all liquidity runs. So price went down, went beyond this point, and it's reversing. So it means right here is what I should be targeting for, aiming for price to make a move. So it means, what does it mean, right? What does it mean? On the weekly, I do not have a reason to actually be buying this market. Not even on the daily. I do not have a daily fair value gap to be buying this market. Why? Because I have a daily bearish fair value gap right here, which I do not trust. And I have this fair value gap here, which I also do not trust. Why do I not trust these fair value gaps? They are all second lines of defense. They are not the first. If they were the first line of defense or overlapping line of defense, like this one right here, I would have trusted it. Like, what do I mean? So like this two fair value gap right here, right? This one right here is overlapping. So it's very, very trustworthy. You can see it even functioned right. Put your stop loss, take your entry here, and you're aiming for this low, right? Aiming for this low. You can see it went in. Oh, sorry. Price went in here. Price beyond this point. Aiming for this. You can see 2.5. Price did and gave you your 2 before started reversing. So I'm not going to be taking any trade here. This is not where I'll take a trade, and it will take a long time before I see any trade here. It's going to take at least days or weeks. It's going to take at least 1 week for price to do whatever it does and come there, unless there are like strong news, strong indications that price is I like that naming. When there are strong indications that price is really pushing backwards for this. So against the Japanese yen, you can see they don't have like serious major news. Do not trust these impact colors. Trust me. Do not trust these impact colors. Look at what the news actually is. So average earnings, leading indicator not so important, current account not so important, 30 years bond auction, very important. Sees if it sells well. Economic watcher sentiment, we don't care. Consumer confidence, this affects a lot. Prelim machine 2 order affects a lot. Bank lending affects a lot. PPI affects a lot. And M2 money stock. What the hell is this? Year on year. Change in the total quantity of domestic currency in circulation in the bank. This doesn't really matter much with technology working. It means you can see this is talking about domestic currency circulation. If you're talking about cash circulation, then it doesn't matter. If it's talking about like normal circulation transactions, then it does matter. All right, so that's it for the Japanese yen. I do not see any reason to come in here yet. Now let's head into the Euro Australian dollars. Now the Euro Australian dollar, I remember saying if I find a trade, I will take it. I did take one. You can even see it right here. And you can see it granted me in beautiful profits. 2RR, let it run. We didn't stop it for anything. It was in drawdown and there was less fear. I don't even know why I walked out of that Canadian dollar Swiss franc trade in the first place. That was very stupid of me. I would have been basking with $600 plus in total now. So, but nevertheless, this happened, gave me my 2-hour arrow and continued on this journey. We should be buying the euro dollar. We should be, but the month is not over for a monthly review. But for a weekly review, I already took a trade based on the weekly review, which is this trade right here. Seeing price come in, come out, and then create a fair value gap. I already took a trade for that. And now I do not have a weekly reason to dive into the trade unless price creates a fair value gap above this high. If price doesn't create a fair value gap above this high, I will not be certain about it. But then again, even with a fair value gap, this is extremely risky. I personally feel price is going to find its way down here first before it starts to do any other thing, which is the 2-candle rejection procedure. But on the daily, there is a reason to buy in this market, right? There's a reason to purchase this market, and the reason is this right here. I can see this fair value gap. I'm not teaching you ICT, right? I see this fair value gap, and a reason to continue in this place is this. It is a very good overlapping situation, right? Very good overlapping situation with very clear show of strength. New show of bearish move, but we're expecting the bearish move to come. You can see it's moving, but it's moving shabbily as compared to, what do I mean shabbily? So you can see this move up was clear, but you can see that the move down is not, sudden. There's still some sort of resistance in its coming down and all that. So what we'll be looking for in this market, right? What we'll be looking for in this market is clearly what is it called? A 1-hour sharp turn, right? 1-hour bullish sharp turn. 1 hour. Oh, that's terrible. I don't know. Like that 14 before. The 14 is too small for us to see. So let's say 18. Well, let's make it 16. So 1 hour bullish sharp turn. This is what we're looking out for. Yeah, this is what we're looking out for. So this is the 1 hour FAG. So this is the 1 hour expectation zone. This is the consequential low. So I like to write it out. I like to always write it out. I think this is lower than this. Or are they the same? They are the same. I won't be taking this trade. Okay, this is lower than this. So this, my dear friends, is my last line of defense, and overlapping defense. This is overlapping defense. Let's call it OLD. So I have overlapping defense. I have a good last line of defense right here. So if I'm going to be taking a trade, I should be praying for price not to make its way down this way, down here. All right, so it means the euro dollar, US dollar, I still have a reason to trade this market. You can see it's on my watch list already. And last but not least, the US dollar, Swiss franc. I mean, this analysis has been long. We should be buying the Swiss franc. Strongly should we be buying the Swiss franc based on what happened, right? Now, in context relation, a lot of the things I have here are no longer useful. Like this is no longer useful. This seems to be the reason why this is no longer useful. This, on the other hand, is where we currently face. But there's something I noticed just yesterday when I was looking at this market. I want to show you something. So if I put a trend here and a trend here, you can see something like a triangle forming up. And all those people who believe in triangle patterns and the rest, this is where they will jump up and say, yes, we have a reason to trade this market triangle pattern right there. So we have the one A, B, C, and D. You can see we already have a triangle pattern forming up. For those who believe in patterns, it's coming up, and we're expecting to see price breakout of one of these edges, and that will lead to a massive move in that direction, right? If it breaks out up, then if it breaks up in the bullish side, massive move in the bullish side. If it breaks out in the bearish side, massive move in the bearish side. That is what we see, or what some people are looking at. But what do I see? What do I see basically? On the monthly, I do not have a reason to panic yet here. On the weekly, on the other hand, everything has happened. I do not have a say anymore here. So I have this point and this point. So price making its way all the way down here, to me, the market is no longer bearish. But making its way down here, or within this place, still okay. But I mean, look at this long rejection, right? Look at this very strong rejection. There's a high tendency, to me, there's a high tendency that this, my dear friends, is being called upon, right? This, my dear friends, is being called upon. From my opinion, it means that there's a high move for bullish reasoning right now in this market. In as much as the Swiss franc is what we should be buying, but take a look at what you're seeing on the chart, right? Take a very good look at what you're seeing on the chart and be as skeptical as you can be. Now, on the daily, we have these positions to trust. You have an extra new position to trust. We have a clean daily fair value gap, right? A very clean one. We have two actually, two right here. So we have two fair value gaps. So right now, if I'm to be shorting this market, which I don't think is a good idea based on this amount of rejection we're seeing, if I should be shorting this market, I should be looking for a 1 hour bearish sharp turn, right? 1 hour bearish sharp turn. I think I should write it in full. I really wish these guys could have their synchronization with their phones, with their mobile applications. It's the same account. Make it like trading view, man. Come on, it's very important. But if you see a 1 hour bearish sharp turn, take it with a grain of salt. It is not so assuring as compared to some other things we have. Now, I have other things here, which I'll be explaining in other videos, which are my focus points. And I'll explain why they are currently on my watch list. They are minors, and you know I do not do minor reviews, and it has taken so long, almost an hour now. We've been on this very video. It's a very good video, very good video in my opinion. A lot of things we talked about. I'd like to thank you all for watching and coming to see my expectations for the week. For the majors, right? For the majors. And when I have minors and I have the chance, I mean, there's a lot of work at the office recently. But if I have the chance, I will drop minor expectations when I find any. Until then, I'd like to say thank you all for watching and catch you all on another one. Peace.